privilege to come and talk to you about Africa. I do many things, and one of us is my national service this year, as we call it, being the president of SAPOA. It is just that. It's something that you do because you really, really, really love this industry, and you want to give back because there is no blue light brigade, there's nobody that look after you. It's a time that we spend to really try and do what's best for the industry and what is in the best interest of the industry. Those of you that were at the SAPOA convention earlier this year would remember that I said that the theme for this year will be Don't Forget the Real and Real Estate. It is something that's close to my heart, and what we are focusing on is relationships, education first and foremost, because I truly believe that the transformation challenges, the skills challenges, many of the challenges that we have in the industry at the moment can be solved through education, and through education at all levels, not just putting people through university, not just getting kids out of school into the industry, but also people in the industry being educated as to how to get the skills required to execute on the initiatives that we want the industry to fulfill. The other very important issue is advocacy, which is something that as you open the newspaper every single day, there are so many advocacy issues that we spend time on. But most importantly, and something that I'm passionate about, is that we also are establishing some thought leadership around Africa. And Africa, as you know, is something that's spoken about often. It is a very, very long-term story. At Stanlip, we have been spending the last 2.5 years building our Africa story, and it is something that takes time, and a lot of time. So, some of you might have seen my Africa analogy where I use the letter of Africa to talk about the investment thesis around Africa. And it's not something that I like to change often, because it is a long-term investment. You have to be in there for a long time. And it's just something that I built on, and kind of as we go through the learnings of walking the streets of Africa, that we expand that to share the lessons that we find on the continent. It's also become a very important skill that we look for in the industry. And as you start working on the continent, traveling on the continent, you realize the importance of putting people in the countries in which you operate. We can't sit in Johannesburg and think that we're successfully going to execute on an African strategy. So I'll share with you what I look for when I employ people that work on the continent. I ask them what they do when they buy a car. Those that tell me that they want fast cars, Lamborghinis, Aston Martins, those, I put them to the side because they have a different place. I then ask them what do they do when they can't find the car that they want. Do they go to another place and go and look for another car, or do they change the color, or do they wait for the car that they really want? And those that are prepared to wait for what they want and what they originally have gone out to buy, those are the ones that I put on my short list, because that's really the kind of resources that you need when you operate on the continent. People that are patient, people that are happy to travel in the middle of the night in all sort of odd hours to arrive at 2 o'clock in the morning in the Lagos airport, being escorted by nobody really to your hotel, and then to be prepared to walk the streets of those cities to understand what's happening on the ground, and to patiently sometimes wait for the meetings to take place. You can have a meeting that's set for 11, you arrive there at 10, well prepared, and the prince or the majesty or the king or whoever in that country has got something else that's going on, and for you to move your deal forward, you need to see that person. So tonight at 11 o'clock, you might still be sitting there waiting. If you're the one that's going to get impatient and walk away and throw your toys out the cot like we would do here, and we do that, the deal will walk away, and the deal will go to those that are happy to patiently wait and see the king, have a drink with him, eat his meal, and conclude the deal. So those are just the little bit of things that we see as we work on the continent. So I use the Letters of Africa, as I said, to explain the African thesis and what we learn on the continent. It remains an aspirational market. The property fundamentals are strong. The rewards are good. You have to invest not only money, but a number of other things. You have to be cautious, there's a lot of risks, and you have to take action. So, as you know, Africa's got large consumer markets. There's a lot of people on the market, and I think where somebody said earlier that where there's people, there's growth, there's capital growth. So that story remains strong, and it remains one that we believe in. The GDP growth looks good for the continent, and it will continue to do so, the outlook over the next couple of years. They say, if you close your eyes to the facts, you will learn through accidents. Now, we don't want to learn through accidents. It's important for you to understand what these facts are and where the growth is in the continent. It remains an aspirational consumer market. Those of you that's been on a plane to London, from Nigeria or from Kenya, who of you have been to the African continent traveling for business into any of these markets? So you will know what I talk about when I say they are called the empty suitcase travelers. So they would fly from Nigeria to Sandton City, to Joburg, and then into Sandton City with the empty suitcases. They fill them up with everything that they need back home. Nigeria is the only flight where economy class you can take 30 kilograms of luggage, not 20 like on any of the other flights. They fill it with rice, bovril, whatever else they like there, and they take it back. At Sandton City, we have a Louis Vuitton store, and we have Sandton Sun next door. So in the evenings, they close the store for the patrons in the hotel. And the average private viewing shopping trip is about R1 million of things that they come and buy in these high-end stores. So it's an aspirational market. They need the things that they can't buy back home, but they also like the Louis Vuitton bags and Gucci and Prada and all those other wonderful things that we're putting in there at the moment. The Porsche dealership in Lagos sells the second highest number of Porsches in the world every year. I'm still not quite sure where they drive them, because I'm going to show you some pictures of the roads just now. But nonetheless, they sell them there. And the important thing for us as we build this real estate story is to make sure that we can capture that part of the consumer wallet. That is why we focus on building shopping centers and retail as the catalyst for other investments, because that brings people to these markets, bring them to spend their money, and through that you create secondary markets in offices, industrial, distribution hubs, residential, etc. The second point is around fundamentals. The property demand continues to outweigh the supply. There's a massive retail shortage there. You just have to drive around to see that these fundamentals stay strong and the demands continue to outweigh the supply. The picture that I have on there, that's really the competition there is for retail. There is very little formalized retail on the market. You see a lot of on the street restaurants. There are few formalized environments, and then there's always a KFC somewhere. Wherever you go, you can be assured you can have some chicken. We say that in Johannesburg there is just more, I think it's 1.05 square meters for every one person in the greater Joburg. In Lagos, that is something like 0.005. So there's just under 100,000 square meters of formalized retail in Lagos. Now there is, depending on what information you believe, there's about 10 million people in Lagos, or 21 if you so believe that. But if you assume that for every 4 people in Lagos you need 1 person in Joburg, or for any one person here you need 4 people in Lagos, from a spending power point of view, there is space for over 3 million square meters of retail space just in Lagos. I'm not talking about Nigeria, that's a whole different story. And it just shows you how much opportunity there is. And we always say that as people in this country that want to expand onto the continent and do some work in Africa, we have to collaborate. We have to work together. We can't do what we do in South Africa and hold all our information to ourselves, because that's our competitive advantage. We share information with Resilient and Novare and R&B and Actors, because it's easier for us to all be successful together by reducing the risk than all try to go out on our own. And with that much space available, or that demand available, you can do that. You don't have to keep everything for yourself. The rewards are good. It still provides good return. We will see this return flatten out over time. The rentals are high. We that set up offices in this environment, you choke at what you have to pay for very, very average office space. If you compare that, Sandton or Melrose Arch, you get something really, really top class for 250 Rand a square meter. In Lagos, you would pay anything between $85 and $95 a meter. We don't operate in Angola, but I understand in Luanda you can do anything up to $125 a meter per month, that is. So the rentals are good. The building costs are also high, but we see development yields in the region of 11 to 14%, and the first exit yields are coming close-ish to 7% now. So you can see that the rewards are good. You can still get 20 to 25% IRR on long-term developments, and these make for good risk-adjusted returns. Now, when I go on a capital raising trip again, I want to take Dolph with me, because we need, with that same exuberance, be able to continue to explain to the international market that you can't get these returns anywhere else in the world but in Africa. And there is a lot of them going, there's so much opportunity. But despite that, we still have a lot of work to do to convince the rest of the international market to put money onto the continent. It is very, very hard work. Our team has been on the road for 18 months, raising capital. And we are being successful. We're bringing capital onto the continent. We've got 7 developments going on in Nigeria, Ghana, Kenya, Uganda at the moment. But if you just imagine how much money, if you compare how much money has come into the South African real estate market internationally over the last year, with how little money has gone into Africa, we still have a long, long road to travel to convince the international market of the merits of investing on the continent. It's very important that there's a lot of investment required, not only of cash, but of many other things. So, as you can see on those pictures, what the roads look like when it rains. In fact, that is in front of the KPMG building in Lagos. So if you want to go and see your auditors, you must put on your gumboots because you're going to swim. But I was told last week that the government has now agreed to upgrade those roads in this area. You know, potholes are as big as swimming pools where you go in some of these markets. You often, if you drive in a smallish car, you can easily see half of the car disappear if you just look down the road, because you go in and out of these potholes as you go. So investment in infrastructure remains very, very important. And as real estate practitioners, we need to continue to drive the infrastructure spend. Without the infrastructure spend, we can't really get our real estate investments to thrive, because if there's no roads, no electricity, no water, then we can't build anything. And so very, very often when we invest in the continent, we have to take care of those things ourselves. So in our investment case, you have to definitely have your own electricity. That's non-negotiable. But sometimes you have to create your own water supply or your own water piping, and you have to build a road to get people to your environments. As I also said earlier, it's very important that you spend time underground, walking the streets of the place that you want to invest in. We do not allow any of our fund managers or asset managers to bring an investment case to any of the investment boards without having been in that city, on that site, and understanding exactly what's around, who's around. And you so often see people talk about Africa, having African PowerPoint presentations, having Africa as a state intent, but very few people have actually been there and understand exactly what's going on there. Also have to understand that environment and how it works. It's very different. And the interesting thing about Africa is that every single country is different. Not even all the countries in East Africa are the same. They are all different. You will go to Uganda and you'll find a very different environment from what you will get in Kenya, and they're just next door to each other. And you need to take time to understand how those things work. The most important resource that you can employ in your business if you want to invest in Africa is somebody that's able to translate the culture, explain to you how partnerships work, and help you understand that relationships make or break those deals. There is no way you can deal with the investors on the other side, or the landowners on the other side, like we would usually do them here. So you would go in here, you put your list of requirements, this is the basis on which we do business, and let's close the deal. And you might as well not go at all. It is very important to understand the culture. Simple things, like how you hand over your business card to somebody, who walks into a meeting first, who sits down first, who takes the coffee off the tray first. And this seems like laughable, simple things, but those things on the African continent, those are the things that make or break deals. The way you write emails, you very often have to spend a lot of time socializing something before you even start to ask what you want at a business point of view, from a business point of view. You might spend 3 weeks sending an email asking, how was your weekend, how's your kids doing, what's happened at church yesterday, and 3 weeks later you can then introduce something that you want to raise or sort out. And we employ cultural translation specialists to help our people that operate in these environments to get that right. Because if you don't get that right, you can never do business on the continent. Small things, but those are the big things that make a big difference in the end. The opportunities are bright, but the challenges remain. A lot of the investment on the continent are all institutional investments. There are very few retail investors that are brave enough, or that I would even advise to invest in here. You need long and very patient money that is happy to invest on the continent. Cushman & Wakefield did an emerging market risk ranking, and you would see that Botswana is first, South Africa second, and then the two big east and west markets, Kenya and Nigeria, being 23rd and 33rd in that ranking. Sorry, I might have to turn this myself. See here, but the transparency is the biggest thing in these markets. In the Nigerian market, you will find that it's very, very hard to get the transparency index up there, because it's not people's culture to actually disclose everything. It's not their culture to lift their skirts. It's not culture to open their books. So to get them to do that for institutional investors that barge in there with a long list of due diligence requirements, it scares them, because it is something that they're just not used to. So you need to do it in kind of bite-sized pieces. The ease of owning property, interestingly, is easier in Nigeria than it is in Kenya. And then the speed of transactions on the other side in Kenya again is a lot faster than in Nigeria. But you show this to the international investor market, and it's very hard for them to understand even why they should bother with investing. And so we have to spend a lot of time to make sure we understand those risks and we are able to mitigate them appropriately. There is a myriad of risks that needs to be taken care of. There's country risk, which is probably the one that everybody first needs to get over. There's currency and interest rate risks. You'll find the whole issue around Zambia has done it first, Ghana has done it now, reversed it again, where you can only transact in the local currency. It makes dollar-based investment quite tricky, and you have to continue to then index your leases to the dollar. But it seems like they have gone back on that now, and in Ghana you can now do dollar-based leases again. There's the operating environment risk. It's probably one of the biggest risks that we have to deal with. I was talking to one of our partners in Vestac last week. They built a 10,000 square meter mall. They're on their third contractor. They had to fire 2 already. And those are the challenges that we have to deal with. We have to try and ensure that we get the likes of Marion Roberts, Group 5, and all these guys here comfortable with working with us on the continent, because we simply can't afford to pay Julius Berger, which is the German contractor, at the price that they charge and the risk that they price in. I've been recently gone to Nigeria, and I'm scared of Ebola, but not that scared. I went to see the new Procter & Gamble warehouse that's being built by Julius Berger at the moment. They're going to make nappies there, nappies only. It is 250,000 square meters under roof. 250,000 square meters under roof. And Julius Berger is building it for them. Julius Berger, they all have their workers in this blue construction gear. So it literally looks like ants on that plant, because it's Germans, and they have this rows and rows and rows of people constructing this. It's actually something quite phenomenal to see. And that's where Africa's nappies will be manufactured. And those are the opportunities. It's in that logistics space.
You know, a lot of these big companies understand that in Africa, if they can get it right, they can have those environments built for themselves.
Then, in terms of geopolitical risks, one of the things that we have done to give our investors some comfort is we've taken out MEGA cover. It's World Bank cover that, look, if any political event happens, we will then get MEGA to stand good for this. This gives a lot of comfort for international investors, and hopefully they don't have to pay out, but it is there in case we need to use it. Land tenure is another risk that needs to be very carefully considered. You need to ensure that you understand who your partners are and who you are in bed with. And are you prepared to sleep in that bed that you're making for yourself? So deep due diligence is required. I cannot emphasize this enough. The ability to execute is important, and we need to export all the skills and make sure that they are all there. And understanding that all the retailers will need distribution at some point. And for some of them, it is difficult to get their products into this country, into those countries. You know the story around Woolworths closed down in Nigeria because they simply couldn't get their stock there. Truworths' stock was sitting, I think, 6 months in the port because they had something in there that they couldn't get through the port. So it's important that you understand those and that we assist them to get up and running in those environments. The last thing about Africa is really about action, and this for me remains the core issue. It remains what we need to do if we want to invest in this continent. We need to have a full glass perspective. If your perspective is always to look at the risk first and then you want to invest, you're going to take a very, very long time to get yourself comfortable. It is not going to happen. You need to have the will, the political will, the passion. You need to want to invest in Africa. And then you go and sort out the risks. And that is probably the most important thing. You need to believe in partnerships. If you want to go at this yourself, I will say good luck and we will send you on your merry way. But I don't believe that it is possible to do this without key partners. You need to plan and you need to be patient. You need to know what you get yourself into. And you need to be able to have a strong execution and implementation capability. And you need people. This is not commodities that we are exporting. We need people that can celebrate, nurture, and embrace Africa's human talent. We need to be willing to grow resources in those countries, to take they are so unbelievably ambitious there, and they are all very, very well schooled. We need to be willing to take them with us on this journey and build their businesses and their lives while we build our own. So Africa is a wonderful story, and it is one that we have to continue to embrace, and it's our duty, I believe, to grow the real estate sector on this continent. So the message is to walk the streets, be there, don't try and do it from behind the computer in Johannesburg, and never forget how tangible this asset class is by not forgetting the real in real estate.